Welcome to a new video on my channel. I hope you're doing fine. Today I want to give you my opinion about the Q2 2022 earnings of the TTCF. The company rose its net revenue around 15.6% to 58.1 million, and the TTCF branded products increased to 33.9 million, which is an increase year over year of around 58%. Net loss was 26.4 million, and now let's jump a little bit more into the details. First part which I prepared is an overview or comparison between the distribution of revenue. In blue you can see the total revenue, in orange the TTCF branded revenue, and the gray line is the revenue or the percent of revenue which is contributed by the TTCF branded products. As you can see over here, the highest revenue percentage of revenue was in the first quarter of 2021, which had a high of around 68%, and in the latest quarter it was around 58%. So it's been a drop. However, the last four quarters were between 56 and 60, so it's still in the normal area, I'd say. However, as you can see over here, the revenue has been decreasing quarter over quarter, so this is something to keep in mind for later on. Now there is also an overview about the different parts of the statement of operations. As you can see over here, revenue is almost a trend line going up. First significant drop has been this quarter, and you can also see that there has been a huge increase in the cost of goods sold, at least in relation to the revenue. You can see over here the gross profit was around 0.7 million, so pretty low, and also the lowest since the end of Q3 2020. You can also see that the loss from operation is the highest, so this is in general not really a good sign. You can also see that the company has been in a different or in the same situation before, like in Q4 of 2021. There's been a similar scenario, and afterwards they had the record quarter. So maybe this is it's not as bad as it looks right now, but we'll see in the future. So the revenue did not increase as fast as the cost of goods sold, and this is due to the higher inflationary pressure, but I will come back to this later on. Something to always keep in mind is the cash and cash equivalent. In this case, they report only the cash in their earnings release, and you can see over here, starting in Q1 2021, the cash has been reduced drastically, and the net loss, I think this quarter, was 26.4 million. So they have almost only one quarter of cash left if they have the same result as this quarter. This is something to keep in mind, but it's only cash, so they still have some other assets, and therefore it looks really bad right now. But I think the situation is still better. They only have a long-term debt of around, I think, 1.4 million, so they still have a good ratio of cash to debt. However, they are still losing a lot of cash, and therefore this is something to really keep an eye on in the future. And the company, I'll come back to this later on. As you can see over here, revenue, cost of goods sold is still in the line, just to give you an overview. You can also see the development of the revenue is semi-cyclical. If you can see Q3 to Q4, it went down, then it went up again, it went down, went up again, went down, went up again, and went down again. So not really sure why there's the cyclicality over here. However, this is something to keep in mind if it's just general consumer demand or if there are other reasons for this. If you have a look at the inventory over here, you also see that normally there's a reduction in revenue when the inventory went up, like from Q3 2020 to Q4, and for the other parts as well. And from Q4 2021, they increased their inventory, and on the call they said they did this purposeful or on purpose to, on the one hand, reduce the risk of supply chain issues and also to being able to launch the new product launches which they plan in the second half of 2022. And Q1 was the outlier in this case, where the inventory as well as the revenue grew. So yeah, I think this is still a hard comparison. However, yeah, the company normally should try to achieve record quarter after record quarter, especially if they're in this early stage as the TTCF. So right now, see over here, they have more inventory than the last year's quarter of revenue. So this is something to keep in mind when you also have a look at the debt. The company also announced on August 8th, so this was yesterday, that they increased their existing credit facility from 25 million to 40 million. They said on the call that this is to increase their flexibility, and they reassured that the credit facility is still unused. However, sure, if you can just come back to this credit facility, this is always something to keep in mind. And as I showed you before, it's with 40 million, it's more than 1.5 quarters of cash burn. So this is something good to know. And also they increased the maturity from September 2023 to September 2025. They also gave an update about their guidance. So they said the revenue is still unchanged. So, however, they reduced their potential gross margin from 10 to 12% to 8 to 10%. And the reason for this is the inflationary pressures, as I said, and yeah, the measures which they are trying to perform to reduce these inflationary pressures as well. So I just had also a look about the gross margins. As you can see over here, in Q1 they had around 11.3% of gross margin, and Q2 only 1.3%, which then leads to a gross margin for the first half of 2022 of 6.8%. So they're almost 1.2% short of their lower range. So they're not that far off. However, it's still always bad if they have to reduce their guidance. So until now, I think this sounds pretty bad. However, the conference call, in my opinion, was a little bit better than the results they posted. So I think they mentioned it a few times in the call that their highest priority is, on the one hand right now, the growth. However, I think the CEO also said they won't be investing that much that they will go bankrupt. It's not what he said, but this is basically what he meant. It was when he was asked about the marketing budget. They also expect the sales to increase in the second half of 2022. This is on the one hand due to the potential or the measures which they use to fight inflation, and also due to the launch of ambient products, which I'll come back later on. So inflation, what are the impacts? Definitely negative impact on the gross margin, as I mentioned before. This is also the reason why the cost of goods sold increased more than the sales, because the increased prices are reflected in the cost of goods sold. And as I mentioned before, they purposefully increased the inventory. They also gave an update about the measures to fight the inflation. So on the one hand, the automation, which they want to increase, and also the usage of robotics, which then on the one hand side leads to more output, and then also a decrease of labor. On the one hand, labor demand, and also for the wages. The other point which he mentioned was the streamlining of processes and also insourcing of ingredients and processes. They mentioned as an example, if they're doing the packaging by themselves, they don't have to pay the increased price to the packager. So definitely makes a lot of sense. However, they also said they won't be able to insource everything, but they're trying to additionally insource different ingredients. They also will be doing a price increase, and this is the first price increase they did, or they're going to do. Until now, they were focused on establishing the brand, and now they think it's the brand is established, and therefore it's the right time to do their first price increase. They also wanted to do only one price increase and not as some competitors, as they mentioned in the call, do it in 2 tranches or different tranches. So this would then, according to the CEO, be still, or the price would still be competitive due to the other competitors already increasing their prices before. If they can really increase the prices, this will also lead to an improvement of the margins. And they also gave an update or mentioned the brand awareness in the US, which has been improving from 4 to 11 and now to 20%, which is quite significant, I think. And they also gave an update about the launch of the ambient products like bars and entries, which they are still planning in the end of 2022. I think also they said for the bars it might be Q1 of 2023. However, since they are higher margin products, this will then also on the one hand increase the revenue since it's no product, and on the other hand it's an increase in the margin. They also build up inventory, therefore I think this would also then be a positive sign, since they have already produced some of these products, which they're then going to sell later on. They've been also asked about their guidance, about when they want to be at least EBITDA positive, and they reiterated that they will be positive on the adjusted EBITDA part at the end of 2023. So it's inside, however, keep in mind it's only adjusted EBITDA, so it's not really positive free cash flow. So something to keep in mind. However, at least they have a path to do that. So what is the outlook? At least, or you can also say my outlook for the company. I think the company is right now at an inflection point. On the one hand, they have inflation as a headwind, so this might lead to consumer spending less, which then might, or whereas they might not buy products in general, be it branded or non-branded. However, I think if you know there's a less known product which is not branded and which is cheaper, I think at least right now the consumer might then just choose the product which is less expensive. I think this is definitely always a problem, and then this might lead to, on the one hand, lower sales and also lower margins. Also, the upcoming price increase, not really sure if it's successful, especially in this circumstance, and if it's still competitive. However, the CEO said they're still competitive on the pricing even after this increase. But I think still it's definitely a risk increasing the prices, and we'll see if they have the pricing power or if they don't have it right now. So this will be something really interesting to see how this develops, and also the launch of the ambient products. On the one hand, if they can launch on schedule, and on the other hand, if the products will be bought by the consumers or not. So these are, in my opinion, the reason why the company is at an inflection point right now. Also, what I realize, at least over here in Germany, there's a lot of competition in the plant-based food area, not especially in the frozen product area. However, non-frozen product, there's a lot of competition from different discounters, and everything is getting really cheap, or at least cheaper. So this might also be a negative for TTCF. So what do you think about the results and also their company and how they're performing right now? Would be really interesting to hear what you think about it. Please let me know in the comments, and hope you enjoyed the video. Until next time, have a good day. Bye bye.